Hello everyone, good afternoon, and welcome to the free market update here tonight for the futures markets, simplerfutures.com. This is Neil filling in tonight, and so let's look, see what we've got, where we've been, how we've gotten here, what this may tell us about what you want to know, and that is the next couple of sessions, coming up. We've got lower left to upper right, no secret, right? Been that way for years. And these retracements into the averages, they've been buying opportunities. And so, at this point, I really don't have any choice but to treat this basically just the same. This is the last I was with you. The last, we talked about, we can get a dip down here into the averages, but the question then that needs answering is, how do we treat that dip down into the averages? In other words, do we close on the lows, indicating more likely bearish follow through for a couple of follow through sessions, or are those lows rejected, which is what we've been seeing and what we would anticipate, and that is rejection of the lows, another buying opportunity, wick across the bottom, and a decent close up here like we're seeing as highly probable for today. Although we got a couple of few minutes into the end of the session, I don't see anything really changing drastically in that short a period of time. We had the Trump press conference today. The market broke a little on the initial comments. There were some comments about some defense and drug stocks, and Lockheed, Raytheon, a couple of things, they pulled back a little bit. A couple of the drug stocks pulled back. If you check IBB, you see it's back a decent little bit. And but how did this resolve itself? And that is that the lows were indeed found as buying opportunities again, reject the lows, and close pretty well here yet again, or it looks like it'll close pretty well again. Okay, so that's what we talked about last as likely, and that was a little dip into the averages. Question then to be answered: how do we handle the lows? And so what we are left with now, as this is Wednesday and we're looking forward into the end of the week, would be a tomorrow trade above today's high, which would then have us start then this march for a little bit higher. And I'll have that target up here. I'd like to see about 2280, 3, 5, somewhere right in there, about 2285, 2283, somewhere right in there. That'd put us at about the expected move as priced in the options chain for the week, and that'd be good. That'd be enough. That'd be just fine. So hopefully this makes sense. The question is it okay, to dip into the averages like that, or is that bearish? And the answer is, well, and how is it handled? And I think we see the answer here. Now, let's remember that we're coming into about 10 days or so from about 10 days, actually, the inauguration, and we could be looking at a different scenario toward the end of, say, next week, but right now we're trying to stay in the moment. And in the moment, right now, what we've got is lower left, upper right retraces into the averages like this. And so I'm evaluating what we're looking at right here today. What does this say for tomorrow and likely even tomorrow and Friday? And that would be a breach of today's high. Tomorrow, trade higher. Friday, up into this 22 kind of 83-ish area, right up in there. Okay. Hope this helps. Good trade. Nice evening. From here, I head to the premium video. We've got some really fantastic things going on. Honestly, spot on in a couple of trades, and that was gold and euro, and the couple of the like the beans, for instance. So I'm going to head and do that and wish you all good trading. Look forward to being with you again at the next update.